Hello guys, today we are going to understand a very powerful scalping concept. So I hope all of you know that I'm mostly doing scalping when it comes to option buying. So see, this is not blindly about trading a 1 minute chart or a 3 minute chart. I used to do it so aggressively before, but even when you're doing it, it's all about understanding the market structure. So that's exactly what I'll be talking about here. Not only about market structure, understanding the higher time frame direction and liquidity sweeps. And then by understanding this, you will be taking a small risk entry on a lower time frame. That could be a 1 minute trade, that could be a 3 minute time frame, that could be normally a 5 minute on an intraday time frame. Okay, so I used to take 1 minute time frame trades also if I'm taking the opening trades, right? Sometimes I take a 3 minute time frame also, because if you are in a larger trend, if you wait for 20 MA, you may not get it. So you may sometimes take it in 1 minute time frame and 3 minute time frame also. So I'll be discussing about that as well, where you can use 1 minute, where you can use 3 minute for scalping, where that is the most comfortable of a time frame for the scalpers with less noise, that is 5 minute time frame. But for each of these, your underlying thing is your larger time frame analysis, the understanding of the market structure and what is actually happening in the market. See, I have seen many traders talking about lower time frame as noise, but that's not the real truth. Lower time frame is noise only when you don't understand the higher time frame. So basically, you will get very good trade entries by using lower time frame, but for that you have to understand what I'm going to talk about. So listen this very carefully. I'm sure and I can guarantee you that this time that you're going to spend here will definitely change your perspective on the market, and you won't be wasting your time. And those who know me, they know that I won't bluff. When I talk the facts and the reality with my experience and what exactly I do, because I used to post only the practical things. Even the live trading videos with the mentees or whatever, all are practical. There is no bluff, there is no assumptions or presumptions in my video. What is the reality, what is the truth, is what it will be there. So watch this video completely, and if you like it, give a like and then share it with your friends also, those you feel like should be watching this video. So see, if you know where the price is likely moving from a bigger picture, right? For example, just one example, if I want to give previous day high, previous day low. So once the price comes to that level, what can happen? There can be reversals, right? So previous day high could be a very important level. Previous day low could be a very important level. Previous day VWAP can be a very important level for the first 1 hour, right? So when you know that, the 1 minute time frame entry can be executed. So that's what I mean by understanding the market structure, understanding the swing highs and swing lows, understanding the bigger picture. So previous day, this is a high which has been made. So naturally, once it comes there, market will be hesitant to make a move on the upside. Now, if you make a move, that is a breakout. So breakout also you can capture in 1 minute time frame. If it's a reversal, most probably that is what you're going to get there. That also you can scalp based on 1 minute time frame. So that exactly is what, because you can spot that opportunities in 1 minute or even 3 minute opportunity. So we will be talking about market structure, means like the same structure appears daily, right? For example, this one that I've discussed, you see CPRs, you see Camarilla pivots, right? So daily you will see the same structure. Again, if you look at some patterns that you can see in daily time frame, you'll see in 4 hour time frame. That's what I use mostly when I trade crypto. When I'm doing option selling, I look at 4 hour time frame, and then 15 minutes. Definitely, I keep it on the right side to trade. 5 minute on the left side. That's what you will see, right? I keep Nifty futures and I keep Nifty spot. I keep 15-minute chart and then 5 minute chart. And beyond that, I'll keep the other time frames also for my reference. So market structure is the foundation. That's the first and the fundamental principle. See, do not trade anything without market structure. Now, what do you mean by market structure, or what market structure will tell you whether the price is making higher highs and higher lows? It's a very simple trading concept. You just look at the price. Is it a higher highs, higher lows? It's an uptrend, right? And or the market is making lower highs or lower lows. That's an entirely different scenario. And whether the price is going inside a range, so that you are understanding the structure. So these are very basic things which any trader who have the basic knowledge should be knowing, right? And whether the price is breaking a particular structure, you have identified a pattern, you have identified a structure, a box structure, or whatever, whether it is breaking, whether the price is reacting to any particular swing highs or swing lows, or the price is retracing into the previous range. So see, the price does not need time first. What the price need is the structure. So that is why I'm talking about the structure. Time only decide the speed and volatility of the move. So first you ask yourself, what is price doing structurally? Is it a trending? Is it higher highs and higher lows? Or is it lower lows and lower highs? Or is it range bound? Or is it in a range? Right? Is it in a Bollinger Band? Or is it stuck with a small price movement? Or is it sweeping liquidity? So, or is it retracing into the previous range? Is it getting reacted at important levels? That is where the analysis begin. So I hope if you are having some basic understanding about trading, I hope you understood what I mean to say here. It's about understanding the structure, whether it is trending or range bound, whether you're making a higher highs or lower lows or lower highs or higher lows, right? You need to understand what structure. That's what I mean by the first part, understanding the structure. Then what I mean by this top-down analysis is that's your compass before entering on 1 minute chart or 3 minute chart. 1 minute I use for the opening trade. For that also we need direction, and for that direction I take the global cues. I take US market. I even when I'm trading US market also, so I know entire price action happen. So what now I'm my daily routine is like 9 to 11 I trade in the Indian market, 11 to 1:30 I sleep. That's my sleeping time. And then 1:30 to 3 I'll be trading again in the Indian market. Then I do maybe quick post market analysis. Then I sleep again. Then I go work out, and then I trade in the US market also. I trade crypto also. So when I'm watching the US market completely, I know what actually happened over there. So I get that, it's not only about, reading somewhere or watching some pre-market analysis and trading. When you're watching the price action, then you know what happened, right? When you know what happened in US market and correspondingly what is happening in GIFT Nifty. So when you know that, it is very easy, and that is there in your mind. It's just a continuation is what is going to happen here. There will be a gap up or gap down based on that, and then the move also will be somewhat similar to what you got there, right? So you will be having that advantage when you're trading the US market. Based on that 1 minute chart, I'll be trading, or sometimes 3 minute chart, I'll be trading. Or if it is a mentoring sessions, I take very less risk and I trade for maybe 5 minute chart. So it again depending upon the risk appetite also. So the direction comes from the top down analysis. For example, here it is the moment I, sit in front of the laptop, that I'll be doing a pre-market analysis every day. In that itself, you know what all things I'm looking at, right? I start with the US market. I start with whatever geopolitical news is there. I also look at Asian markets, and I'll also look at GIFT Nifty. I'll also take an analysis of the open interest. I'll also look at the ADRs. So you make a view. And then you look at that 1 minute chart. And if you're so aggressive, you trade based on that. And then if you want to be slightly more conservative, you trade based on 5 minute chart. So you have that broader picture. And then based on that, you have the understanding about the market structure, what happened previous day. Immediately the market, before the market opening, you'll mark the previous day high, previous day low. You'll mark the important pivots, and then you take the entries. So the direction comes from what? This understanding of the market structure, or the top down analysis that you're doing, looking at the higher time frame, weekly, daily, and the fundamentals, what is happening in the world market, what is just happening in the Asian market, right? And what GIFT Nifty is doing. So all these, based on this, you'll make a view. And then comes to the shorter time frame, and then you will react to what you have already formed in your mind, right? So you see the daily time frame, right? Check whether the price is in the larger picture. So and then you see, simply ask yourself, are we inside a daily wick? For example, if you see a doji candle, upside wick or a downside wick is there, are you inside that range? Are we near a daily supply or demand zone? Even this can be considered if it is in a day intraday, the first 5 minute. Are you inside the first 5 minute candle? If you see last day expiry, what happened? They kept the market completely in the last, except couple of candles broke the day's high on the first 5 minute, and couple of candles broke the day's low 5 minute. Everything else, except those four candles, completely in the range. So it's very difficult to trade that, right, as an option buyer. So futures, I can trade. Option selling, I can easily do, but it is very difficult to trade as an option buyer, but still we can manage by taking support, resistance, reversals. So you also have to ask, are we near any daily supply or demand zone? It could be a Camarilla pivot, it could be a CPR, it could be a simple R1, R2 or S1, S2 level, or it could be simply previous day high, previous day low, or even if it is that opening range. You also ask yourself, are we inside in any kind of daily rejection area? Have we seen the rejection or support at this area before? For example, you look at 24,000 last day, what happened? Even 23,800, there is a double bottom, and from 24,800, market went all the way till 24,500. You can, this is what I mean by top down means daily time frame, bring in 4 hour time frame. For example, if I'm trading crypto, right? Bank Nifty, this kind of analysis, this much is not required. You can have the fundamental analysis, what is happening across the world, daily understanding, and then you can come and trade. When I'm talking about crypto, check whether the price is reacting to, at 4 hour time frame. Is it rejecting? Is it sweeping liquidity? That's very important concept when it comes to crypto. Is it forming any kind of reversal structure? So daily time frame, you're coming down to 4 hour time frame. Now you need to come down to 15-minute time frame. Same can be replicated in the Indian market also, but this is more applicable when it comes to crypto. Now you ask yourself, 4 hour is done, now 15 minutes. Check for the confirmation. Is it the same trend? Right? So you again ask yourself whether the price closed above or below the important level. Did you get a closing above this level? If you get a closing, that's a different story. If you're getting a wick, that's a different story. So both are supposed to be treated differently. Whether the structure have shifted in the 15-minute time frame, that is giving an early indication also. Is the price is now aligned with the daily and 4 hour time frame? In that case, it is giving a better confirmation as well. Now comes to your favorite time frame. It could be 5 minutes if you are slightly conservative. It could be 3 minutes. It can even be 1 minute. Now, if you have done this top-down analysis, 1 minute is not a noise. Otherwise, 1 minute time frame, if I am looking at it, I don't understand. If I look at the 3 minute time frame, I don't get the clue. But if I am coming from the top, then I'm analyzing in the 1 minute time frame. I can get that entry. I analyze in the 3 minute time frame. I can get that entry because I'm coming from the top. I know what is actually the market structure at the daily, at the 4 hour, at the 15 minutes, so I can make decision here. Otherwise, looking at 1 minute time frame or 3 minute time frame, I cannot make a solid decision. I hope you are very clear with this. It's not that you cannot simply say 1 minute is completely noise. 1 minute also trading activity is there, price is moving. That's why the candles are formed, right? So 1 minute or 3 minute, whatever you are comfortable, whatever you are trading, use this only for execution, not for analysis. This is for your execution. If everything is aligning, your entry execution based on 1 minute. The 1 minute chart is never, to be used to create a view. In that case, it's completely noise. You cannot make a view, right? So it is only used for getting that precise entry for scalping with a small risk and a higher reward. It's not necessarily 1 minute, it can be 3 minute odds. And that's very important. Keep this in mind. So this is what I mean by the top-down analysis. I can show n number of examples, but for that, I have to put a lot of effort. I need to go through the charts and explain, right? So that will, again, this is going to be a long video, I know, because I'm going to talk a lot of things that will again add, more time to this. See, again, one of the most important concept is previous day range. That's something which, when I say previous day range, it's basically previous swing high and previous swing low. Now, if you look at our market, 24,500, a swing high. 24,600 is a very important swing high. Now coming down, 24,000 and 23,800. These are very important levels. Price will react definitely. So you understand this in a very simple way. It's the swing high or swing low. Previous day high, previous day low. Right? So then if you see this level is breaking, then you may get a breakout. If you get a candle close also, if you see a reversal, you'll get a very good risk reward trade, right? So the ranges between the breakout point and the swing low, that is what I mean by the previous range. So the swing high, swing low, previous day high, previous day low, this is your range for the next day. Now, once you see that range is broken out, or even simply intraday trader, what they make is the first 5 minute candle. You make the high and low, that is your range on that day. See, once this level is taken out, or the expectation is that the price may retrace into the previous range on, most of the cases, right? So let's say yesterday's high is 24,000. What is the high? 24,500. I think Sensex expiring, Nifty went to, yeah, I'm talking about 7th of May. I'm recording this video on 8th. So 7th of May, I think 24,500 is the high made, and then it reversed and gave a close at around 24,330. So now what is expected? Once it comes to that level, there is a high probability that the price may get reversed, right? Sometimes it can be 30% reversal and then it will continue towards the higher gain. If it is supposed to give a breakout, sometimes it's not necessarily 30%. I'm talking about it can be a Fibonacci retracement. If you're using, then it is 32 or 33 or 50% it can be. So again, depending upon it could be a 30% retracement, it could be a 50% retracement, or it can be a 70% retracement. But simply, can I take a retracement up to 20 MA? That's my question. So if you are getting a reversal, if you know that is an important area, can I take and hold this trade till 20 MA? That probability is very high. So the probability of getting 30% reversal is 70%. Probability of getting 50% reversal is 50%. Probability of getting 70% reversal is 30%. So when we have a 70% probability of getting a 30% reversal, should I attempt this trade or not? I have a probability of 70% to get a reversal till 20%, 20 EMA. Should I try this or not? 7 times I attempt out of 10 times, I'm going to win this. And rest of the things, it's all about managing the risk reward. What this itself is what you need to make profits or profitable trader for your lifetime. Trust me, guys, this one single concept is enough. Right? This is very powerful because many traders buy the breakout very late. But what the professionals will do is they wait for the pullback, like 20 MA. Now from 20 MA, it can bounce and it can give a breakout also. That can give you a breakout trade also even before the breakout sometimes. Because if you're entering after the breakout, 81% of the case breakouts will fail. That's another statistic. I'm talking about maths. I'm talking about numbers. That's why I told you in the beginning, I won't bluff. If you're waiting for an entry after the breakout, that again will be a big issue. That I can discuss later. That also you'll be looking for the pullback. So professionals always wait for the pull. Waiting game is trading. Waiting is what will make you money. If you jump on it with a FOMO by seeing a big breakout candle, you'll just get trapped. Right? So that's why professionals will always wait for the pullback. The pullback is where your actual profit is. Why? Because what happens when you got the breakout? Either it may go fast, you missed it. Now, if you entered, if it is reversing, what is your stop loss? That breakout candle. How can you hold till then? The stop loss in that case is bigger. See, I can have 3 rules. My profit can be small, profit can be big, loss can be small. But whatever reward I'm going to get, I'm not going to take a big risk on a big candle on a breakout candle. But if you wait for a pullback, what happens is your stop becomes very closer, very smaller. For example, I got a breakout candle. There's a breakout candle. Now I wait for retracement for the breakout. I wait for 20 EMA, maybe 9 EMA, whatever EMA is close to me. At least half of this candle retracement if I get. Then my risk is half of this only. Then the chances of winning is also higher. Maybe that high may be taken or tried at least once from that level. Right? Your reward becomes higher. Your risk is smaller if you wait for the pullback. If not, your risk is higher. You're not sure about the reward. And when you're waiting for the pullback, you're not having that FOMO. You have that patience, and your entry becomes very cleaner rules. And that is why the winning probability of that is naturally higher. And always understand prices always in a point of interest. See, many traders, I've heard this, they will tell that price is in no man's land. Right? But the reality is price is always inside some point of interest. It may not be like daily POI, right? It may not be like 4-hour POI. I'm talking about point of interest. Okay, but some time frame, price is always reacting to a structure. Any time frame if you take, price is always you have. That is why I told you understand the structure. That's very important. So instead of saying nothing is happening, you have to train your eyes to ask on which time frame is this level is important. Is it important in a daily time frame? Is it important in a 4-hour time frame? That is how lower time frame scalpers think. That is when you can be a scalper at a lower time frame. If you understand the market structure in a larger time frame. That's what I mean by larger perspective analysis. Never ever chase the first move. This is a big and most important lesson that I want to discuss. Sometimes without volume also you guys tend to chase. See, if you are attending my mentoring session, you will see I never chase. breakouts. Sometimes breakdowns, because breakdowns is panic. Panic will keep going down. Breakouts is hope. It may not be like successful all the time. But if it is a panic, chasing it is worth it. But I never chase any breakouts unless I'm so sure the war is going to an end. I'm getting a news, then I chase. Otherwise, without knowing exact reason, I'll never chase. Upside, breakout. This is my rule. Some of you may not agree to that, but that worked for me. But I chase the breakdowns. I don't know what is the reason, but still, if I see a red candle, I chase, and even if it is failing, but still, majority of the case, I win big in a red candle chase. But I never win that big in a green candle chase. You try, you go and test, back test, do whatever. This is what you're going to see. Now, if you can implement this personally to your trading setup also, I can tell you, you'll avoid a lot of fake breakouts. When price enters a daily or a 4-hour point of interest, right, means demand supply zone, do not immediately take the first minute, break of structure. Why? Because see, higher time frames, that zone, that need time to form a proper reaction. It's not that immediate reversal, right? So within that daily zone, again, price may need time to form the candle, to form the actions. So as an option buyer, it may consolidate, it may go sideways also. So even if you see that, for example, I've analyzed at the daily time frame, right? Even daily means how many 4-hour candles, right? So many 4-hour candles, multiple 1-hour candles, or a proper consolidation and shift, and everything is required within that. So if you are talking about a weekly analysis, within that, how many 4-hour candles are there? How many 1-hour candles are there? So when it comes down, again, the same thing will happen, right? So if you have done an analysis at the 4-hour time frame, there can be multiple 1-minute candle which is there at that exact supply resistance level. It is just touching there and holding that level. Sometimes at 20 MA also you'll be seeing. Yesterday, if you look at it, first 7th of May, Sensex expiry, you got a big breakout. It failed. Eventually, it is taken out. After that, 2 candle breakouts, 3 candle it is taken out completely in the 20 MA. That's the expiry key. So there you should not get stuck as an option buyer. I'm talking about. So wait for the sweep, wait for manipulation, wait for consolidation, and then shift and then enter. Do not just enter because you saw some small breakout on 1-minute time frame or some small reversal in 1-minute time frame. That is where I've seen majority of the traders getting trapped. So never do that. If you are looking for a breakout trade, liquidity sweep is very much necessary. This is one of the strongest point that I want to tell you. If there is no sweep, you are the sweep. That's the famous saying in the market. I hope all of you understood the concept, right? So what does that mean is, before a valid trade, price usually need to collect liquidity. For example, for a bullish trade, price sweeps are low, manipulates below a level, and then close back above the structure. That's what I mean by sweep, liquidity sweep. For example, for a bearish trade, price sweeps are high and manipulates above a level and then close back below the structure. By this time, many are out, right? The sweep is important because it gives the fuel. And without this sweep, your entry may become that liquidity that the market hunts. So do not just trade the zones. You need to ask yourself, has liquidity been taken before my entry? Otherwise, you will become the part of the market hunts, right? So see, one setup that I always take is, the idea, for example, the price comes to a point of interest and mitigate that area multiple times. If this happens, it may, so for example, this daily time frame, if you take days high and days, previous day high and previous day low, it may tap the area several times, right? It can come there, it can hit there, it can tap the area, means it can touch that levels multiple times, a few taps on the left side, a few taps on the right side, and then it can break, right? That's how. Then there can be manipulation around that area. Then it can move in a real direction also. Whatever area they really wanted to go, it can move. For example, Wednesday, right? After the Nifty expiry day, we got a beautiful, breakout. because this war fear was coming to an end. US also, that is mainly because of the news. But what happened before that is there was a sweep, and from 24,000 it started going up. CPR was also there. I remember very correctly because I have taken the trade and I was holding also. And then you got a big breakouts. And then continuation is what you've seen yesterday. That is Sensex expiry day, and then got a breakout, but it is taken out also and then consolidated. That's an expiry gate. So there will be manipulation, and then they move in the real direction. This happens across time frames. The idea is not to trade every single moment. That's not required. The idea is to identify that specific area where price repeatedly reacts, and then wait for any kind of manipulation there, any kind of sweep there, and any kind of confirmation there. And that is where high probability, big reward opportunity comes. Again, many have this confusion about the ranges. Ranges can be tricky. Now, one more thing that I want to answer here is people used, this is out of this one which we are discussing. People used to ask me whether to look at Nifty spot or Nifty future if you are trading options. If you're trading options, what you're trading options? You have to trade options, you have to look at the options chart. You'll see my call option and put option strikes. But these are derived from the spot. So I have to look at the spot. The price move again decided by the futures trades as well. So I have to look at the futures also. So I have to look at the options. That's what the one which I'm trading. So if it is above VWAP, I trade that. If it is below VWAP, I won't trade that. I'll sell that. Right? If I need to buy it, have to be above VWAP. Secondly, I look at futures and the spot also. For dynamic resistance, for example, EMAs, VWAP, etc., I look at the futures. For horizontal resistance support levels, I look at the spot also. That question anyway answered, right? Now, again, coming to the ranges, it can be very tricky. Inside the range, if you see, you may see the sweep the high, or again after that come back down and sweep the low, go back up, right? And you see repeating this multiple times. And many traders try to buy every low and try to sell every high. But what happens is that create confusion. You don't want to buy the low and sell the high. Even if I want to go for a long trade, I can buy comfortably once the moment price break 20 MA. That is where I get the momentum also. Similarly, if I want to sell, I can still wait for, I don't want to chase from the top. I can wait even the break of 20 MA, and that's where you'll pick up the momentum as an option buyer. Future trading is different, right? So avoid that confusion. So the better approach will be always know which side you are waiting for, and like do not short here, buy there, short again, buy again like a squirrel. You need to have a clear trade idea. That is why pre-market I tell, right? Today, this is what my view. I'm going to buy on dips or I'm going to sell on rise. Till afternoon, I'll stick to that. And then based on the market condition, I'll change mind. Either you are waiting for a sweep and reversal, or you're waiting for continuation after a reclaim. So when you have the clarity, what happens is, what is the advantage if you have a clarity? If I'm deciding that I'm going to buy on dips or sell on rise, I avoid unnecessary trading. I don't have any over trading. I'll wait for the dip to buy. Until afternoon, that's my view. Or I'm waiting for a rise to sell because I've analyzed whatever happened. I've seen what is happening in the US market. Based on that, only I'm making a view. So I avoid over trading. Right? So again, many people, if you are getting stuck in the opening trade, especially on expiry day, because the time decay also will be faster, you can just avoid it. Maybe you can avoid the first 30-minute trade, and once things are getting settled, you can trade. This is one of the questions that I used to get. You don't want to have the FOMO. So if you're not experienced, these are the times where the positions are built. A lot of manipulations can happen. So avoid that. Once you get that experience, you will realize this is the time where you can make money, right? So first 15-30 minutes, maybe Nifty or Bank Nifty, it can trap the traders badly, especially on expiry day. Once you enter on a call trade, and even if the move is small, slightly only on the downside, but still your call premium will melt. Option buyer, this is a problem. So if you do not understand the larger structure, if you are not that experienced trader, avoid that impulsive opening trades. After 15-30 minutes, once things are getting settled, you can trade, where the decay also slightly will come down, right? So see, before the price reverse, it may form a rounded structure. Mostly this is what you call as a kind of cup like this, or an inverse cup if it is a reversal, or you will see double W or M or double bottom or double top. That kind of, see, the first dip will be like a normal. If you see a kind of round, if you see a kind of M, the second dip can be, the probability will be lesser, but can be faster and bigger. Like rounding near this POI, point of interest, or the supply or demand zone, that can show that the price is preparing to turn. That can capture your bigger reversal trade. If price break above that rounded structure and then comes back to the retest area or to retest that area that actually caused the move, that can become a strong continuation of opportunity for you. But if that key area breaks, then what happens? It means you are likely to, or you will be in the wrong side in case if that breaks. That is where your stop loss is also there. So that rounding, double top, double bottom, M formation, W formation, cup formation, or inverse cup, whatever language you call it, right? So that basically differentiate a true continuation or from a false breakout, and or it is going to give you a false breakout or reversal. So these are the points if you can keep in mind, right? Then I don't think that you will overtrade. I think you will have a larger understanding of the market. I think you will start taking the better trades. And before price reverse from a supply or demand zone, I want to see certain things. For example, if price is moving up into supply zone, okay, let me tell you, higher high one, higher low one. That is something which I need to look at. Higher high two, higher low two, higher high three, higher low three, and higher high four. So I need to keep watch on this. And after you see some 3 or 4 swings, then what happens? Price become mature enough for a reversal. If price has only made, one swing into a supply, it may simply break through, right? So before shorting at the supply zone, you need to see, or you need to ask yourself, has the move matured enough? Means higher high one, higher high two, higher high three. If it is one move like this, then it can break. That's what I mean. I don't know whether you understand my language or not, but these are basic concepts that I'm discussing. So the thing that I want to know to take a reversal trade, whether the move is mature enough, that can protect you from entering a weak reversal trade so early. And you get a very good stop loss, small stop loss trade also. Right? See, what we can do is we don't want multiple entries, right? When you have a view, after that I need to have a level. If I have a view and I have a level, and then one clean entry is enough at the exact area at the right time with invalidation behind the point of interest. In case if it is breaking, I'm out. In case if it is reversing, I'm out. If I've taken a breakout trade, right? On the downside also. If I'm wrong, I'll exit. So there is no random averaging. There is no emotional pyramiding. There is no feeler kind of trade also. So your entry should be where the price is expected to react immediately. Especially as an option buyer, I need to get, if I'm looking for a reverse, I need to get it immediately. It is not where I enter somewhere and I keep waiting for a reversal. I keep praying for a reversal. I should be entering the area where if there is a reversal, it should be an immediate reversal. Because option buyer, I don't want to give time also. If it does not react to you, your idea may be wrong. Immediately exit. For that, I keep a rule. I keep a 4 candle stop loss. If in the first 20 minutes I'm not getting, means whether it is in profit or loss, stop loss is not taken, still I'll exit. And then always go for a trailing stop loss. It's not a fixed stop loss, right? You can trail candle low based or candle high based stop loss, or you can trail based on EMAs also, or you can trail based on super trend. I use 14 to super trend for trailing. And these are different for different strategies. If it is option selling, option buying, futures trading, all these are different. But you might have your own setup. So idea what I want to convey is trailing stop loss. It can be monetary trailing stop loss. Keep booking after 20 points, 50 points, and keep trailing the stop loss. Or it can be candle based trailing stop loss, or it can be technical based trailing stop loss. It is up to you. I'm just leaving it to you. I just want to tell you that you should be trailing stop loss, right? And you should never leave profit on the table for a particular risk reward. There is nothing like fixed risk reward before the entering. I cannot look for 1:5, 1:10 like that. The moment I get 1:1, I book partially. Then I keep trading. See, because the reward depends upon how the price develops. You cannot fix it, especially option buying. If you get stuck, then you get stuck. Even if the price stuck there, your stop loss may be taken because of the time. So sometimes you may get a 1:2, 1:3, sometimes you'll get 1:5, sometimes it can be 1:12 also. But how you capture that is by trailing only. So you do one thing always, do define your risk very clearly and let the reward develop through management. You trail it. But for beginners, do not aim too far. Because if you cannot consistently secure your profits, do not try to hold a 1 minute entry all the way till days high or something. Your entry is 1 minute or your entry is 3 minutes, right? So first learn to take that reachable targets and then slowly expand your holding ability. It takes time. It's not that easy. And if you are tensed, if you have that emotional issue, then don't watch the PNL while trading. Sometimes feeling loss is also not comfortable. Sometimes feeling the profit, you will think that I may lose this and I'll book also. So what you can do is you can watch the structure. Is the structure is breaking or is it invalidating my thoughts? You can look at the targets on. You can look at the candle behavior. You can look at the stop movement, right? And not the money, not the profit. Because if you focus on money, then what happens? Emotions will increase. Then you'll start thinking, this is too much profit, I'm done. Or what if I lose now? Or let me book this profit. Or let me hold more so that greed will come. What if I lose it? The fear will come. So the better approach, the cleaner approach, a professional approach is you trade the chart, not the P&L. I never, even if it is in lakhs, I never look at the P&L. I trade the chart, I trade the candle. See, again, intuitions is very important, right? Intuition is not magic. It does not come from watching videos. It does not come from reading the concept also. You see, I take trades on intuition, right? Sometimes. So that comes from taking a lot of trades, getting stopped out a lot of time, watching price a lot of time, watching the charts a lot of time, reviewing your mistakes a lot of time, repeating the execution a lot of time, right? So I've taken the trades, I've taken the stop losses, and I've seen the prices moving in my direction after taking the stop losses. And then I've reviewed my mistakes, I've repeated the executions, and then you recognize the pattern. Then you recognize your mistake. And then you recognize what market is telling you. And that is what I mean by intuition. That's the intuition based trade. It's not random trade. Some people think, if you remember yesterday, I've posted 4 live trading videos, Sensex expiry. All are hitting good. Is it intuition? That intuition comes from where? That intuition comes from after taking thousands and thousands of trade, thousands of stop losses, watching hundreds and thousands of charts, reviewing mistakes day and night without sleep also, and repeating the same. So that's why in seconds I can identify the move. I can get that 40, 50 points. If you see 4 trade videos I've posted yesterday, Sensex expiry. Just before this video, I'm posting 4 trade videos. What's that? It comes with that experience. But it should not become, an excuse to break your rules. It can help you to avoid bad trades or refine timing, but it should not make you kind of impulsive trade. It should be a rule-based trading. But sometimes expiries, you have to take it. See, losses also have patterns. This is something which is very important. Most traders, what they do is they study winning trades. But losing trades also have patterns. If you frequently lose in the same kind of environment, that environment is teaching you something. For example, you may lose under a rounded structure. You may lose inside a messy range. You may lose during maybe opening trade manipulation. Opening trade that's moving. You may lose when there is no sweep. So review your losses and ask yourself, where do I repeatedly lose? And once you identify that area, You can either avoid it or you can build a separate rule for it. And this is how your losses become data, and that data will teach you, and that becomes a stepping stone, and you will win from that. Next is very important, that is risk sizing. That is up to you. I'm just leaving it to you. Position sizing, that should grow with your account size, not your confidence spike. Because even you're confident, one trade is enough, it can take out everything, right? So risk management I've discussed multiple times. Even if you're losing leverage, you have to use very carefully. Do not, depend on it emotionally, and don't get stuck in that liquidity, issue also. If you take excess leverage. Right, I'm done. I'm tired, so I think I should stop. So for a beginner, what I want to tell you is first learn how the market moves. Understand how the market structure. Do not start with a complex model. You see my trades, you may think like it is complex, right? So what you need to do is you understand the structure, you understand the range. Some of you may see it very easy also, how easily he is scalping and you can do it, but it is danger if you do it. I told you, I have seen thousands of trades. I have taken thousands of stop losses and I've learned from that. So you need to understand the structure, the range, the sweeps, the point of interest, the reactions at that level, the liquidity, and learn one system and backtest repeatedly. Whether it is our system, whatever I have taught you, or whatever I am teaching you in the live market, do not compare your entries with others on the social media. That's very important. You cannot, because your understanding of market. See, two people can make money in two different ways from the market. In the same candle, one can short and make money, one can go long and make money, because one candle is 5 minutes. I have, you see, yesterday's my trades, it lasts for 1 minute or even less than that. Rest of the time, it could be a reversal trade possibility, right? Do not chase other people's PNL, do not chase other people trades, do not chase other people's strategy. Your learning, your understanding, your experience, focus on price. It have a lot to tell you. You backtest, that build you confidence. That is why, and that is where a beginner also have to focus. So you have to first study, you have to backtest, execute small, have the journal, learn the mistake, repeat the process. Right? So this is what I want to discuss with you. I think I have done justice to the time that you spent here. I hope you will follow and you'll improve. If you like the video, give me a thumbs up and share it with your friends also. See you in the next video.